Good morning, traders. This is Michael coming to you from Game Edge on Tuesday, July 29th, 2025, with our pre-market prep session. Thanks for joining us this morning. As always, like and subscribe on YouTube, as well as follow us on X, and you'll be notified when we go live and post our intraday content. If you've not followed us here at Game Edge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at our market trend model that is based on the tick index. Again, you can research at your favorite investing website. Quick takeaway is it is buying versus selling in the overall market from market participants. The key area that we like to look at is this bolded white line. This is our intraday instantaneous CT or cumulative tick. Again, this will tell you buying versus selling between market participants. Yesterday, we did see some weakness throughout the day and responsive from SPX price action. Consolidation sideways to down, but you see this bolded white line under our shorter term moving averages that we place on for momentum. So today, if you're a bull, you want to see this shorter term bolded white line start turning back to the upside, indicating more buying obviously is occurring than selling. And then you want to see these moving averages turning back up like you see over here for some positive slope and price appreciation via the SPX, most likely from buying within the overall market. If we do continue to see short-term weakness within this bullish structure, then we'll see this bolded CT start coming down into our colored ribbon, red above cyan on our colored ribbon. So again, longer look back period, still overall bullish from market participants. If you'll look at our breadth indicator up here, it actually narrowed a little bit yesterday. The green is new highs, obviously red new lows, so not significantly outpacing as we did previous days. But still enough to push us for more accumulation than selling within the overall market. And then our filtered cumulative tick obviously was slightly to the downside. This is plus 1,000, minus 1,000 larger block orders from institutions. Again, staying below zero, indicating that institutions were selling aggregate via the overall day. And then our CT, which is our cumulative tick, obviously under the zero line and to the downside. So again, we'll continue to watch this. May just be short-term weakness within the overall uptrend or some sort of pullback starting again, but we'll know that right away and be able to see this and position ourselves on the right side of the market. And that's basically what the market trend model does, is to be on the right side of the market and continue to trade your trading plan accordingly. So moving on to the SPXA, obviously these are what we call the cruise ships. These are larger institutional or larger market participant positioning. These contracts are only turning over via the monthlies. So again, this gives us our 30,000 or 40,000 foot view of the overall market without these contracts turning over rapidly. Call dominated above and below spot price. So if you follow this for any amount of time, obviously you look at the net delta column and notice that we have green via the whole net delta column above and below our yellow spot price. So again, indicating call domination there. So any pullback should be supportive. And then we do have market speculation to the upside all the way up towards 6,500. Currently, we're around 6,400 pre-market. So 64.25, 50, and 6,500 would be those upside levels. But again, this is not exerting as much force on the intraday trading. This is basically your monthly, obviously, expiries as well as on out in time. So again, call dominated via the overall institutions and larger market participants. Moving on the SPXP, so these are our shorter dated contracts. We call these our speedboats. These turn over obviously via 0 DTE and multiple day expiry as well as weekly. Call dominated above and below spot price. Transition area on the full expiry, as you'll denote by the purple tiles turned on here. So these are all expiries, 63.90 down to 63.45. You'll notice that'll come into play here in a few minutes when we look at the 0 DT structure. To the upside, we see 64.50 COTMC up there. Obviously, this is a proprietary game edge level where out of the money calls become in the money, and we see 6,500 up here, COI, PGEX, as well as the JPM short call. Again, this could be an area that we traverse up to, but then this will be a significant headwind to get over as we head into the expiry. So we'll continue to watch this. For that basically upside cap on price, 6,500 would most likely be where we're looking if we traverse 64.25, 50, and then up towards 6,500. And then to the downside, again, call dominated above and below spot price. So we'll most likely see supportive type action on any pullback. unless we see an overall sentiment and structure change. Sentiment and structure change would look like the erosion of in the money calls below us and out of the money put speculation starting to come in. And this would show obviously via the green net delta leaving the overall complex and exposing red net delta, indicating out of the money put speculation to the downside. So via our net OI command that we've been discussing with members this morning, we are seeing a large amount of puts going into the overall complex, but still not overriding the overall call dominated structure. Again, puts going into the complex is not necessarily bearish. That is hedging to the downside and can be very supportive within an overall call dominated bullish structure. But then if we start losing that out of the money call speculation to the upside, as well as the in the money calls below us, then that can change more towards a bearish structure. And we'll see that day over day, and we'll be able to provide that content in pre-market prep. All right, moving on to the GEX ratio. Obviously, if you've been following us, this is a put call ratio, a better put call ratio though, because we had a time component, which is gamma, increase in SPXP price action to the upside or consolidation. We want to see a positive sloping GEX ratio, indicating short-dated call gamma is still entering the overall complex. So again, if we have a divergence of spot price up and GEX ratio down, that'll resolve one of two ways. Either spot price will come down via the move of the GEX ratio, or we'll see GEX ratio start to turn back around and move to the upside, again indicating most likely price appreciation. GEX ratio is spot price sensitive, so if we do see a declining overall spot price, then obviously we'll be losing out of the money calls to the upside, or sorry, in the money calls, and we'd be capturing some more of those out of the money puts, and those would become in the money, so obviously your GEX ratio would change. But again, bullish here above the zero or above the one line, and a positive slope, so nothing really to change here on the overall bullish sentiment and structure. Delta balance for the week, you see obviously the right hand plane dropping a little bit yesterday in a negative slope, left hand plane, which is below spot price, the red dotted line, positive slopes here, so in the money calls, out of the money speculation, again just a slight drop. Don't get your magnifying glass out. We're above zero, call dominated, delta balance pegged at 1. So again, bullish structure continues to remain. And again, you see little blips. Obviously, could be a little bit of weakness into the end of the week, and then just a rebound here on the out of the money speculation. The same thing with here. So again, this is pretty much what we see via price kind of grinding to the upside. You'll see this kind of cycle of out of the money calls going to the upside, and then profit taking. You'll see out of the money calls drop a little bit. You'll see in the money calls come back to the upside, and you just see this kind of round, we call it a sine wave or circle, just continuing to go over and over and over again until we see a significant change in sentiment and structure, as well as positioning. And again, that significant change would look like an overall left-hand plane, right-hand plane continue to drop through zero, indicating we're losing that speculation to the upside, as well as the in-the-money calls below us, and that would indicate out-of-the-money put speculation to the downside. But again, as you're looking at the delta balance, nothing's really changing here, so bullish and steady as she goes for the rest of the week. SPX P0 DTE, so we systematically go through this again. First, we look at the overall sentiment and structure, so our call dominated above and below spot price. Next, we look at the transition areas. Is spot price above the transition areas? So our transition area today is unambiguous, 63.80, 63.85. So obviously, if you're above this, you're in a little bit more positive gamma call-dominated environment, most likely supportive push to the upside. If you lose transition, we could be in a little bit more negative gamma environment, not necessarily put dominated unless we see the structure change, but again, just a little bit more weakness, again, down towards index here at 63.70 and then 63.50. As I've drawn these arrows, you see this largest gradient to the downside. So again, in the money calls below us, those will continue to be supportive unless, again, we see a significant change. And then we'll draw your area of attention to the drunken sailor range, low exposure area within this overall range. Again, choppiness, and you're at the mercy of the intraday volumetrics as well as zero DTE intraday volume traders. So we'll move over to the net stack command, and then we'll go through our overall game plan for today. So you can pause your player and save these and mark these areas on your chart manually if you want, or you can come join us in our Discord. We have these areas automated through a TradingView or Thinkorswim script, and you can just upload those, and those will show automatically within your within your broker or your trading platform, or you can come and subscribe to our web app, and you'll have all these levels automated for you. Net stack command, highest sensitivity levels for today. 6,400 to the downside in the money calls. So again, those will be supportive throughout the day as long as we're above that area, as well as transition. 6,425 to the upside. That's that first out of the money call stop we'll be looking for. Charm, again, 6,480 out of the money calls. Very balanced on Charm today. There will be a point where most likely one of these will start winning the overall battle. But again, traversing to the upside where 6,480 is above 6,450 again will most likely be difficult. And then to the downside, we see 6,350. That's why I discussed that lower area if we did lose transition. And you see the gamma sensitivity errors as well as the Vanna as VIX continues to drop, as well as volatility continues to drop across the board. So, all right, let's head to our overall trading plan for today. I've drawn it out on the SPX. This is obviously not live this morning. We can flip over to the spread X in just a few minutes, but transition areas are marked out. Drunken Sailor range marked out here. As of now, let's see what we're going to open at. As of now, 64.01. So we'll just go ahead and look at this spread X now. So obviously this is pre-market possible opening. So above Drunken Sailor range would be looking for a move towards the upside. Obviously 64.25 would be that first stop. You see the prior day level or prior day high here. Obviously this is after market time. You see it's 2 o'clock in the morning here. So again, that just may be a confluence of area of a previous price high, as well as 64.25, that gradient on the web app we're looking at. Within the overall Drunken Sailor range, obviously this would be choppiness price action. If we lose 6,400, we could easily drop down into this transition area. We'd be looking for supportive type action. We'd be looking to take a long versus that area. Again, easy, unambiguous stop areas if we do lose the overall transition, which is 5 points. So a move back to the upside would be your long play. If you're below a transition area, again, this would be a short play to the downside to the Drunken Sailor range. Most likely not tactical to play within this overall Drunken Sailor range today, back and forth. So we'd wait for the bottom of the Drunken Sailor range to give us an opportunity to possibly get long. You saw that index level 63.70. That would be an area we would look for support, and obviously a prior day low here for after hours. So again, a confluence kind of an area. And then if we lose the bottom of the Drunken Sailor range, we would be short, looking for a move down towards 63.50. We see COTMP here on all expiries at 63.61. Again, that's an area where you could see monetization. So that may be a first stopping, pausing point, and then a move down towards 63.50. So that would be the play there. And again, if we're above 6,400, we'd be looking long for 64.10, which is the top of this kind of TA level this morning. And then above 64.10, again, if the volumetrics and intraday volume is indicating a move to the upside, we'd look for 64.25. So that's our overall trading plan in place for today. Drunken Sailor range transition will be key, staying above 6,400 key level, obviously for any move to the upside. Again, we could see stop sweeps this morning, just dropping below into here and then back up, as we've seen quite a few mornings heading into the opening weakness intraday, and then a rebound back to the upside. So again, the vol M command will be important for us today to monitor that. So if you want to learn more about that, come join us, and you'll be able to watch our intraday volume metrics as well as our commentary of what we're seeing via the positioning intraday, and helps us put on overall trading plan for today. We had very successful yesterday for many members for some broken wing butterflies and some other trades that were working very well via using our vol M, vol D, and vol U commands. So with that, I'll leave everybody this morning. Thank you for joining us. If anybody has any questions or comments, I'll hang around for another 1 or 2 minutes. Or if anybody wants to go over single stocks, I can pull up our web app and look at those. But again, intraday levels will be key today. Obviously, you already see SPY bouncing at our proprietary P-Trans level, which again continues to be a supportive type action for the day. And then if we lose P-Trans, we'd be looking for the pre-market low around 637. But again, call dominated above and below spot price, so structure is supportive on any pullback unless we see a large change. So, all right, thank you everybody. Thanks for joining us, and make it a great day.